Hey, it's Tom here and welcome back to the channel. Now, it may surprise you to hear that over the past almost 2 years, Berkshire Hathaway has steadily been putting money to work and making its biggest investment ever. And this isn't actually a stock that you might see show up on a 13F filing. If you look up Berkshire Hathaway's 13F, you'll still see that Apple is listed as their largest investment. But during 2020 and for the first 9 months of 2021, Berkshire Hathaway has actually invested close to $45 billion in its biggest investment, like I say, of all time. And that investment is not in a new private company that they've purchased outright. It's not in a public stock that we'll see on a 13F. That investment is actually in itself. Berkshire Hathaway has been really ramping up their share repurchases over the last few years from almost nothing only a handful of years ago to the point now where they are reinvesting basically 100% of their operating profits annually into buying back their own stock. And just to put those share repurchases in perspective, since the start of 2020, like I say, Berkshire have spent close to $45 billion on repurchases. The cost basis in Apple is estimated to be around $36 billion. Their biggest private acquisition ever, Precision Castparts, was around $37 billion. And the basket bet that Buffett made in the airlines in 2018 and 2019, which caught a lot of publicity, was about $7.5 billion. So this really has been a massive capital allocation decision for Berkshire Hathaway that has largely flown under the radar. And in this video, I basically want to cover two main topics as it relates to Berkshire Hathaway's share repurchases. Firstly, I want to show you where we actually find this information. Berkshire Hathaway itself is not going to show up on Berkshire Hathaway's 13F filing that we see each quarter. We do need to go elsewhere to see these share repurchase numbers. And secondly, I want to talk through some of the things that Buffett has said specifically about him repurchasing Berkshire stock so that we can get a feel for how Buffett actually thinks about these share repurchases relative to buying into other publicly traded stocks. Now, the place that we go to find the information on Berkshire Hathaway's share buybacks is actually their financial statements. So Berkshire Hathaway just reported their earnings only in the last week or so. So if we jump across to Berkshire Hathaway's most recent 10Q and look at their balance sheet, you'll find a line item on the balance sheet of Berkshire called Treasury Stock at Cost. Now, treasury stock essentially are just kind of retired shares, so shares that the business has repurchased, whether that's in the open market or whether they've purchased blocks of shares from individual shareholders in some sort of private transaction. That all shows up in treasury stock at cost, which means that over time we can track what Berkshire Hathaway's treasury stock at cost is doing, and we can monitor how aggressively they're buying back shares. And if we go back only a handful of years to say 2017, the treasury stock at cost listed for Berkshire Hathaway on their balance sheet was about $1.7 billion. Now, since that time, that amount has ballooned to $3.1 billion in 2018, $8.1 billion in 2019, $32.8 billion in 2020, and as of the most recent 10Q, which gives us data up to the end of September 2021, that treasury stock value, the total amount that's been spent on share repurchases, is now up to $53 billion. And an interesting kind of accounting nuance when it comes to Berkshire's share repurchases and when you look at treasury stock at cost on the balance sheet is that that number does actually come through as a negative value. In other words, it actually decreases the equity or the book value in the business. And for companies that are sort of serial buyers of their own stock, that can actually do some interesting things from an accounting perspective over time as well. McDonald's is a really good example of this. So McDonald's is clearly an extremely strong business which has done well and grown for a very long period of time, but it may surprise you to look at McDonald's financial statements and look at their balance sheet and find that they actually have negative shareholders' equity. Now, of course, that doesn't mean that McDonald's is a terrible business or anything. It's just that if you look at the balance sheet of McDonald's, you'll see this massive item of common stock and treasury at cost of, as of their latest 10Q, about $67 billion. Now, over time, Warren Buffett has been very consistent and also very open in terms of talking about how he thinks through share repurchases. So I'm just going to quickly read a piece that he put in his 2019 annual letter to shareholders in a section called Short Subject. And in that section of the annual letter, he says, in past reports, we've discussed both the sense and nonsense of stock repurchases. Our thinking boiled down is Berkshire will buy back its stock only if A, Charlie and I believe that it's selling for less than it's worth, and B, the company, upon completing the repurchase, is left with ample cash. Calculations of intrinsic value are far from precise. Consequently, neither of us feel any urgency to buy an estimated $1 of value for a very real 95 cents. In 2019, the Berkshire price to value equation was modestly favorable at times, and we spent $5 billion in repurchasing about 1% of the company. Over time, we want Berkshire's share count to go down. If the price to value discount as we estimate it widens, we will likely be more aggressive in purchasing shares. We will not, however, prop the stock at any level. So to me, it's becoming very clear what's going on at Berkshire Hathaway right now and how Buffett is kind of thinking through capital allocation. He clearly sees that the shares of Berkshire Hathaway are very attractive at current prices, or at least the prices they've been at over the last year or two, particularly when you put that in relation to other opportunities that are available. Warren Buffett and Charlie Munger have always talked about opportunity cost being kind of their main mental model in terms of how they think about different investment opportunities. They really have to assess what's available from an investment perspective at the time and kind of just pick the best thing that's available. They're not the types of investors that will sit there and try and predict a market crash or anything like that, or sit on excessive amounts of cash for longer than they think they need to or is prudent. They're really just going to assess the opportunity set at the time and then go ahead and make investments that seem rational given the current environment. And if we're looking at the current environment today, we're looking at a stock market that is at all-time highs. We're looking at private equity markets, which have very easy access to a lot of cheap debt, which has really driven up things like private business valuations, as has the boom in things like SPACs, special purpose acquisition companies. So Berkshire is really, in my mind, kind of sitting there today with not a whole lot of other options. And luckily for them, they have a stock that looks reasonably priced and they have a lot of firepower to be able to repurchase it over time. And for all the reasons that I've just mentioned, that is one of the reasons why I personally have chosen to include Berkshire Hathaway in my Shameless cloner portfolio that I'm starting on the channel. Basically, if you haven't seen the introductory video to that series, it was put up on the channel maybe a couple of weeks ago now. Basically, what I'm doing in that series is I'm picking a list of my favorite investors and I'm purchasing into the stocks at various different kind of portfolio allocations that they happen to be buying. And when you look at Berkshire Hathaway's 13F, it may look like Warren Buffett is kind of just sitting back and not doing much. But when you do a little bit of digging and start to look at the recent share repurchases from Berkshire Hathaway, he really does seem to think that Berkshire is the most attractive proposition for Berkshire itself from an investment perspective right now. Now, the final thing I want to cover when it comes to share repurchases, and particularly if you're an individual investor trying to analyze Berkshire Hathaway's current valuation, is Berkshire's historic use of price to book value. Now, for the longest time, Berkshire Hathaway was basically authorized to buy back shares in itself at anything below 1.2 times book value. That's kind of the simple proxy for intrinsic value that they were using, or at least a floor for intrinsic value. Like Buffett said in his letters, he's not going to give away a very real 95 cents in order to buy something that's maybe worth $1. So I think in reality, 1.2 times book is probably a very conservative assessment of intrinsic value at Berkshire. But again, in the last couple of years, they've pushed that threshold up to about 1.3 times book value. And if you look at the stock at the moment, it's actually currently trading at 1.4 times book value. So it really kind of begs the question around how far will Berkshire push that valuation and continue to buy back shares once it gets to 1.3 or beyond that. Are they just going to stop completely? And how do they kind of think through that equation? Well, from my perspective, if you want to continue to use some sort of book value multiple as a proxy for intrinsic value for Berkshire Hathaway, there is one quite significant adjustment that you probably need to be making, and that is to do with this treasury stock at cost that I talked about earlier, and using kind of McDonald's as an extreme example. If you were to use some sort of book value multiple for McDonald's and they have negative equity because of all these share repurchases over time, the numbers can get kind of funky. And I think if Berkshire continues to repurchase shares for a long period of time, they're pretty likely over the long term at least to run into that same sort of problem. So if we look at the most recent balance sheet again for Berkshire Hathaway, shareholders' equity is currently listed at $481 billion. So one would think that you can just multiply 481 times 1.3, you get about $620 odd billion of market cap with that quick kind of simple calculation. You would think that Berkshire would repurchase shares at anything under about a $630 billion market cap. But if you start to account for this sort of accounting nuance of treasury stock at cost that's now decreasing shareholders' equity, and you add back the 50 odd billion that now sits on that line item on Berkshire's balance sheet, and then you sort of multiply that new number, this larger shareholders' equity number, by 1.3, you actually get to a bit higher market cap. So you're now looking at about 530 odd billion in shareholders' equity. If you multiply that 530 odd billion by 1.3, you're now landing very close to about a $700 billion market cap. So I think that's an important thing to keep in mind if you're looking to analyze Berkshire. I think if you were to continue using book value as a proxy for intrinsic value, I expect that the book value multiple that makes sense will kind of go up over time, because shareholders' equity is constantly going to be getting dragged down by share repurchases. So that's really it for me for this video. I do hope you enjoyed it. It's one of these things that I think flies under the radar for a lot of people. I think it would surprise most investors to hear that Warren Buffett has now spent more on share buybacks at Berkshire than he spent in Apple and Burlington Northern and the airline bets and so on. It is a genuinely very, very significant investment at Berkshire. So I do hope you enjoyed the video. If you did, please hit like and hit subscribe. That's all from me for this one, and I'll see you in the next video. Cheers.